This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on another fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. As always, it's a Wednesday morning and it's looking good out there. I'm Prashant, with me, my colleague Sonia and Survi. Guys, hi, morning.
Hi, good morning. And it's also the 9th International Yoga Day.
Yes.
And I think, for all of us, right, people who sit at their desks for long hours, yoga is so important just to keep yourself in shape. I've been practicing yoga for many years now, and I think that's the only reason why I'm kind of sane, both mentally and physically.
I just check myself. As long as I can do the chakrasan, I feel, okay, all is not lost. So till now, fingers crossed, it's happening till now. You never know with the passing years.
Sonia, sane and mentally, we'll be the judge of that. Well, those are visuals.
Not quite, really. So. But yeah, look at that. The world is celebrating Yoga Day.
I mean, as they say, yoga se hoga, right? I think so. It's a big one and internationally accepted, of course. I mean, ancient art, practice, which now, of course, has got international acceptance. And those are visuals coming in of leaders and yoga practitioners doing yoga around the country.
Today is going to be interesting, right? Because there is a yoga event. So far, Prime Minister Modi has been conducting a lot of these events in India.
Yeah.
It'll be the first time after many, many years that he'll be doing it abroad. He begins his US visit as well.
At the UN General Assembly. I mean, talk about destination yoga, right? It's really right up there.
Well, absolutely. And I think, will the markets do a little bit of yoga as well to reach out and touch those all-time highs? I think that's the other question.
You want to show us one asana that you like, perhaps the one that you...
Like this?
Maybe moving a little bit, to fix your back.
Well, markets at new highs, I'll do that'll be an asana. Anyway, I mean, the markets, by the way, are going to start on a softer kind of note. Yesterday was a tremendous day because you had the Nifty, which took support at last Thursday's low and staged a bounce back. By the way, it was almost two halves. Completely two different halves. From 10:30 when the market hit a low, 10:30 a.m. yesterday, when the market hit the day's low at about 860 or so. From that point on, you basically had a very slow and steady up move all the way till about 3 p.m. And then, I mean, it was almost as if a rocket took off, and between 3 and 3:30, all those gains of 60, 70 points that you see on the screen came through, all in the last 30 minutes of trade. So, dramatic turnaround of things. U.S. markets overnight are not providing too much by way of support this morning. So they've come back from a holiday. Monday was a holiday, but yesterday we were trading. The S&P 500 is down about 0.5% or so. We've got some data out of the U.S. which basically tells you that housing is super, super strong. I mean, month on month, you have the biggest month-on-month increase in housing starts since 2016. And I think right after a Fed pause, this will start to complicate things a little bit. We, by the way, will hear from Fed Chair Powell once again, but this time as he testifies before the U.S. Congress over the next 2 days, both Wednesday and Thursday. He'll be making comments, answering questions. There's a prepared testimony as well. So I think markets will be interested to know additional thoughts after what we saw last week. All right, now let's come back and look at the market here, right? So we got a nice bounce, nice pullback in the last 30 minutes of trade. But upside is clear, right? You need to reach out, make a new high, and then we'll see. If the market does it with gusto, with some exuberance, you kind of can project higher. But if this is a middling kind of market action, as we've been seeing, hesitating around the highs, we'll have to see. So instead of putting projections out on the higher side, I'd still like to go with supports on where you should be comfortable going in. So supports come in at 18,660. By the way, yesterday morning we said that the support will be the last Thursday's low, and the low of yesterday and Thursday's low was almost exactly similar. That's the number, 18,660, which I think is still important. The 20-day also has come up a little bit. That stands at about 18,610. So instead of chasing, watch the price action in the first hour or so, and then maybe around those levels if you get an opportunity, if you must, perhaps take long positions. Bank Nifty has closed around the 40-day exponential moving average, which is 43,710. There was an intraday breach and then we closed above it. So for the Nifty Bank, supports come in at that level, which is 43,710. And then yesterday's low, which is 43,346. Again, instead of trying to chase any move, if you get levels around here, I think you're better suited. I mean, it's even, I would say, forget the 40-day. If you get levels around yesterday's low, I think it'll be more favorable from a risk-reward point of view. Massive action in mid-caps and small-caps continues. There was a bit of a halt, but it kind of continues uninterrupted. It's a vast space, and the number of stocks which are participating with huge volumes is just something to see. And of course, I mean, Prime Minister Modi in the US markets will eye from geopolitics, etc. There'll be a lot to watch out for. But from a market perspective, the one sector which I think will watch for announcements is basically going to be defense ties, making in India, technology transfers and those kind of things. We've been reporting on this, and I think that remains the focus. Sonia.
Oh, absolutely. And, we're going to also talk to a lot of yoga gurus about their, not just their practice, but also their life lessons, right? So that's going to be interesting. I mean, a good day today. But give and take everything, as you said, today is going to be a very flat opening. The market, the SGX Nifty is suggesting a very, very quiet opening. So we'll see how it goes. Yesterday, the Nifty made an attempt to once again get back to that 18,800 mark. The Nifty, remember, give and take everything is just 70 points away from an all-time high. So we are virtually at those levels, but faltering a bit at higher levels. It's important to look at the group of stocks that are taking the markets there. So in the month gone by, the pharma stocks have come back in a big way. So whether it's Apollo Hospitals, which is up about 12% for the month, Dr. Reddy's is up 10% for the month. So new pockets are sort of making the Nifty get closer and closer to those lifetime highs. But as we were, as Prashant was also telling you, the global markets have been slightly on the weaker side. The Dow was down about 250 points overnight. FedEx was down about 3% after reporting weak numbers. So the earnings are not too great from that pocket. FIs in our own market have been selling in cash for 2 consecutive days now, and it's a large amount. Almost 3,000 crores has gone out from the Indian markets in 2 days from the FIIs. So there's definitely some caution on board at higher levels. Now, just a couple of things. Of course, Fed Chair's congressional testimony is something that Jerome Powell's testimony is something that will be watched very closely. Any indication of further rate hikes is something that the street will keep their eyes peeled out for. And apart from that, in our own markets, as I said, banks on one hand and a couple of other pockets like autos, pharma, etc. on the other hand, banks have been faltering, but on the flip side, plenty of action in so-called laggards that are coming back in a big way.
Yeah, that's been happening. In IT, I think, is a case in point, because we've seen that trickle buying come back into the IT sector. That's the one that was trying to fight for the bulls even yesterday. But all things put together, I was just looking at the extent of the ranging action, and like Prashant said, that's what I thought. Can the bulls actually do a yoga stretch and get out of this range, which is what they've not been able to do? In the last 17 sessions, we've been dithering around 350 to 400 kind of point band. So it's 18,500 roughly, or 550 on the downside, to about 18,850 on the upside, and there's been no break. So the silver lining is that we're not really alone. We are up just about, if you look at the last 1 month, not just June, but the last 1 month data, Nifty is up 2.7%. Look at the other markets. Dow's up about 2%. The CAC is down 2.5%. Shanghai is down about 2.5%. Of course, the only outlier market is Japan. That's where the headlines are, the action is. That's where money managers are going. That's where Warren Buffett is putting his bets out as well. So that market, of course, has been stealing the thunder, 7.5% up in Japan in the last 1 month. But otherwise, most markets have been in a bit of a ranging zone. So that is some comfort that we're not the only ones out there, which is why the action perhaps is just going to remain on individual stocks. Prashant mentioned the defense space. We saw the defense rally on Monday. Let's see if we get some more leg up, because the announcements should start coming through tomorrow, actually. Today, Prime Minister Modi has been in New York. He's doing some meetings over there. He'll be at the UN General Assembly, like we told you. That's where the yoga action of the day is going to be. Pretty big moment, really, for India, for yoga, to be out there and spreading the word at the UNGA. But it's tomorrow onwards. That's when he's in D.C. He's doing the bilaterals, meeting President Biden and also meeting other CEOs. That's when the defense announcements should start trickling in. So let's see if there's some follow-through buying, just because of sentiment on these big stocks. Remember, HAL is in focus because of that big GE engine deal. Last but not the least, I mean, we're still searching for cues and triggers. So it's further commentary from the US chair, which we should get tonight as he's making the statement before the committee. And there's monsoons. The Met experts have been saying next 2-3 days we should see a revival in Maharashtra. No sign of that, at least in Mumbai as yet. But we're back to the mid-cap action. Today, there'll be some interesting stocks to track. I mean, we heard RVNL come out with some announcement on that big Vande Bharat train order, that some more block deals in focus, Piramal Enterprises for that matter. So I think we'll just have to stick to looking at individual stocks for now.
Oh, absolutely. And I'm very, very keen. As we were talking about how he's going to be performing, or rather conducting, Prime Minister Modi will be conducting yoga at the UN headquarters. 9 years ago, if you remember, he came out with this idea of celebrating 21st June as International Yoga Day. And since then, I mean, yoga has transcended not just the body and the mind, but all global barriers as well, right? Yep. I mean, it's a big, big moment. And I'm very interested to see what comes out of that.
All
okay,
right,
but let's begin the show. We have lots coming up in the next 2.5 hours. And first up, we have a comment from Mahesh Nandurkar of Jefferies, who says that the economic indicator for May saw a growth increase of 2 percentage points month-on-month to a 4-month high. He says several broad data points improved, such as fuel consumption, domestic eco-linked imports, and cement production. He adds that auto and property sales, registrations, electronic payments, and credit growth also demonstrated firm trends. Mahesh says while the trade deficit increased, the drop in inflation was sustained, though a weak start to the monsoon is a concern. He remains overweight on the domestic market.
Okay, well, on equities, we've got Sanjeev Prasad of Kotak Equities, who says that the strong performance of mid and small cap stocks in the past 2 months raises the prospect of irrational exuberance in the market and also further reduces the set of stocks with some value, which has struggled to find value in the market, with many stocks in their favored sectors like BFSI, capital goods, healthcare services, real estate having run up sharply in the past 1 or 2 months, leaving the BFSI sector perhaps as the only meaningful sector with any value.
Okay, so that's Sanjeev still holding out positive favor for the BFSI space at least. Let's move to the money markets and get you some views here. Kunal Sudhani of Shinhan Bank says the Chinese yuan continues to weaken, which has its reflection on the rupee as well. He says the dollar index is seen consolidating with 102.10 as a support, and the 10-year US Treasury yields have cooled off as well. He says all eyes remain on Fed Chair Powell's testimony, which is due today for further direction. For the USD INR pair, Kunal says that 81.85 acts as a support, while 82.25 is a resistance.
Okay, and on the bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a range of 7 to 7.04% last week. He says global cues had a little effect on our market, which reeled under the pressure of the auction supply. He says demand remained muted, particularly in the longer tenor papers. Going forward, he adds the market will take cues from Bank of England's rate decision, US Fed Chair Powell's testimony, and the demand in weekly bond auctions. He expects the 10-year benchmark bond yield to trade in a range of 7.03 to 7.1% for the rest of the week.
Okay, and as we've been telling you, really the action is going to be on individual stocks, and there are plenty to track today. We'll talk about them in our top 10 segment in just a bit. Today we are looking at Shriram Finance, Piramal Enterprises, HDFC Life, RVNL, Shilpa Medicare, GR Infra Projects, Pidilite, Thyrocare, Jamna Auto, all these on the green side likely today. Some other stocks that we're looking at, actually none of them on the red side. Now that I look at the board, it's all 10, in all probability, may open up on the positive side.
Okay, well, Gary Schlossberg is now joining us, global strategist at Wells Fargo Investment Institute. Gary, great to have you with us here on the program. Thanks very much for your time. What's your opinion? Global equities, Gary. I mean, in the US is continuing to see a lot of action, although at the margin, some are starting to say that this is starting to look very, very stretched. Are you in that camp, or you think there is more to go here?
We are. We think that the U.S. still sees a recession ahead, a moderate recession, sometime late this year or no later than the early part of 2024. There is some optimism developing on the interest rate outlook as well. The idea that the Fed is in an extended pause on its way to rate cuts. I think Powell's testimony, Chairman Powell's testimony later today or tomorrow, could pour cold water on that. He'll certainly do his best to keep alive the possibility of rate increases, just to keep the market on the straight and narrow. In the meantime, valuations are quite high. Here in the U.S., the S&P 500's price earnings multiple, forward price earnings multiple, about as high as we've seen since March of 2022. So a lot riding on the testimony, but we think the chair will have the effect of cooling things down a bit.
Okay. So what does all of this mean, Gary, for a market like India? I ask because, the S&P 500 is up about 15% for the year, while India has sort of lagged behind, right? I mean, we're up just about 3-4%, although a lot of the action is happening in the broader end of the market. Do you think India could take over for the rest of the year, sort of outperform developed markets? What's the sense you're getting?
Well, I think it's going to be a tug of war a bit. The fundamentals in India, as you heard earlier from one of the analysts, do look quite good. However, the international environment, slowing economic growth, the prospect of further interest rate increases at the very least by the Bank of England and the European Central Bank, with the Fed perhaps sitting on the fence but being a bit more circumspect about the outlook. These are going to create headwinds for developing markets, emerging markets generally. There's also the El Nino effect that's something of an uncertainty. So there will be headwinds ahead, but I think India should stand out among the emerging markets as one of the best positioned for gains if they materialize generally for the sector.
Harry, hi, good morning. So, just come back to the global picture. When you say that you're expecting a mild recession in the US from a market direction point, are you expecting more of a ranging action for, say, the second half? Or do you think this is just an interim pause and then we see a resumption of the uptrend?
We think there will be a pullback in the market. It may be a mild one, but with the recession, putting a further dent on earnings. Keep in mind, earnings are already down year over year. During the balance of the year, I think the outlook for corporate earnings will become a bit more guarded. That should be reflected in the equity market. By very late this year, if the prospect of an economic recovery sometime in the spring or perhaps summer of 2024 does begin to take hold, you could see the market recover a bit. But we think there'll be a speed bump in the market as we enter the early stages of an economic slowdown, as mild as it might be.
Okay, and how would you describe mild? I mean, are we talking 5 to 10%, more, less? I mean, any sense of that?
Well, we are looking for a peak to trough decline of about 1.5%, which would place it as a moderate slowdown, similar to what we had about 30 years ago. A mild slowdown, anything less than 1% peak to trough. We think it'll be a bit more than that, but certainly the risks, the chances are beginning to tilt toward a mild economic slowdown, given the economy's resilience so far and some of the positives out there. Notably, a slowing of inflation. Now, that disinflation has resumed over the past couple of months, and we think will continue through June.
All right. Well, we leave it at that. Gary, thanks a lot for joining in. Appreciate your thoughts here on CNBC TV 18. Let's slip into a quick break, but on the other side of the break, we'll get our list of top 10 stocks lined up in just a bit. Stay tuned. All right, welcome back. It is International Yoga Day and hope you've got all your yoga asanas in place. But we've got our research team in place to help you with all the stocks that you need to watch out for as we begin the day. Let me get Nimesh on board. Nimesh, Shriram Finance, Piramal Enterprises on your list. Tell us about that.
Well, so another large block, and this time Piramal Enterprises is looking to sell its entire 8.3% stake in Shriram Finance. The book was launched last evening. The floor price indicates up to 5% discount to yesterday's closing price. So, last week we saw TPG exiting Shriram Finance, and now Piramal is looking to exit. The important thing is, I guess the street was anticipating this move from Piramal because the stock rallied 6% yesterday. At a floor price, the stake that 3.1 crore that Piramal holds, they will raise close to 4,600 crores. The market cap of Piramal Enterprise is just 20,000 crores. So it's a big monetization for Piramal Enterprise. So I'll go with green for both Shriram Finance because it's a clean out trade. And for Piramal, they're getting say 4,600 crores by selling that 8.3% stake in Shriram Finance today.
All right. Interesting. And we were pointing this out yesterday on Piramal, and the stock was rallying. Nimesh, thanks very much for that. Now, HDFC Life and HDFC will be in focus. Surabhi is here to tell us why. Surabhi, morning.
Morning. So, Competition Commission of India, CCI, has approved HDFC Limited to acquire additional shareholding in HDFC Life. Now, currently they hold around 48.6% in HDFC Life, but post the merger of HDFC and HDFC Bank, the merged entity will hold over 50% in HDFC Life. So, this was on expected lines, but still positive for HDFC Life.
Okay, got that, Surabhi. So we'll watch out for both of those stocks. Some more in the news. Let's talk about that clarification from RVNL on their big Vande Bharat order. Vivek, good morning. What did you make of it?
Well, good morning. Very interesting clarification coming in from RVNL last evening. Just post-market hours, they issued a clarification to the exchanges. So now what the company is saying in terms of the news report that was put out day before yesterday, the company is saying that the news of the company as well as the Russian partners JV breaking up is factually incorrect. What they are saying is that the MOU or the Memorandum of Understanding that was signed between the two parties is still valid and none of the parties have terminated the MOU as yet. In fact, what they are saying is that the bank guarantees will be submitted on time as per the tender conditions that was put out in the bid document. And lastly, the company does add that there are right now deliberations still going on with the Russian JV, in terms of changing the terms of the Memorandum of Understanding. So we'll still wait and watch out for what the management indicates to the exchanges if there is any change as far as the MOU is concerned.
All right, thanks a lot for that. Well, let's go back to Surabhi. She has some more stocks that are in the news. Surabhi, what are you looking at today?
So I'm looking at Shilpa Medicare firstly because they're going to consider a fundraise via a rights issue in their board meeting on Friday on 23rd of June. Next is GR Infra. Now they've received a letter of award from NHAI for a 4-lane project in Uttar Pradesh for 1,085 crores and the completion period for this project is 730 days. Additionally, their wholly owned subsidiary, the GR Logistics Park Private Limited, has also executed an agreement with National Highway Logistics Management for a logistics park in Indore worth 758 crores. I'm also looking at Pidilite because the company has launched manufacturing facilities under its JV Pidilite Liticol and 10x Pidilite in Gujarat. Now the Italian counterparts have transferred technology to Pidilite as a part of their JV and now the company will sell epoxy and epoxy adhesives to tile application for Pidilite Liticol and stone care products for 10x Pidilite. And lastly, IGL is also on my radar as Citi has written on IGL with a buy rating and a target price of 560. They say in the new development, the Delhi government states that the validity of permits held by taxis running on CNG will now uniformly be 15 years. So in the draft scheme mandates, the aggregators will have to switch to full electric cab fleets within 7 years. While the final aggregator policy is awaited and there are still uncertainties, the recent correction improves the risk-reward ratio in the favor of IGL.
All right, got that. Thanks very much, Surabhi, for all of those stocks. Back to Vivek. Vivek, you have some more on your list?
Well, that's right. Yesterday you saw some very interesting block deals, in counters that are reasonably well tracked. First on our list, Thyrocare, you saw almost 5% equity change hands. So yesterday in the post-market filing, the Ariseg Asia Fund, sold almost its entire stake. A 5% stake sale was done at close to 488 rupees a share. Majority of the chunk was bought by ICICI Prudential Mutual Fund, buying almost 22.5 lakh shares. Post the block deal, you did see the stock rally quite a bit in yesterday's trading session itself. Also, watch out for Jamna Auto. So small cap world fund sold 1.5% stake in yesterday's block deal. At the end of the March quarter, they held close to 3.2% stake. Even this particular stock rallied quite a bit after yesterday's block deal. It'll be interesting to see whether there is any follow-up buying in both of these counters today.
All right, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow. There's Shriram Finance, Piramal Enterprises, HDFC Life, RVNL, Shilpa Medicare, GR Infra, Pidilite, Thyrocare, Jamna Auto and IGL. Well, guess what? There are no stocks with negative news today. But Surbi is back with us. She'll tell us about a couple of brokerage notes that she's focusing on today. Surbi, what do you have?
So first I'm focusing on ICICI Pru. Jefferies has written on the company and they have a buy rating and they've raised their target price to 640. They say the growth pickup is a key agenda for the company and there is scope for valuation to re-rate from these levels. They also say the new CEO, Mr. Bakshi, has experience from his previous bank head as a retail banking in ICICI Bank and that should benefit the company. Also, they're focusing on improving distribution efficiency and customizing products and tapering off of ICICI Bank channel should even out by second half. So that should benefit the company as well. Motilal has written on Blue Dart. They have upgraded to a buy with a target price of 8,040. They say the lower ATF prices should support margins and aircraft additions will boost volumes in second half of FY24. They say they have market leadership in Air Express and now they're focusing on increasing market share in e-commerce. They expect the company's EBITDA margins to rise to 13 to 14% from second half of FY24 from current levels of 10 to 11%. And lastly, Morgan Stanley has written on BEL. They have an overweight rating with a target price of 136. They say that the company has received orders worth 59 billion rupees in FY24 so far, which is 30% of their FY24 order inflow guidance. For FY24, the company has guided for a revenue growth of 17% and an EBITDA margin band of 21 to 23%. The company targets to maintain its book-to-bill ratio of 3 times.
All right, got that. So a couple of those stocks in focus on the back of those brokerage reports. Thank you, Surabhi, for that. With that, let's move to commodities. We have Manisha joining in as always with all the action. Manisha, good morning. What's on your radar today?
Morning, Sylvie. Thank you for that. Well, I'm looking at the crude oil prices, which after losing 1% overnight have seen some stability right now. Well, the markets are looking out for the U.S. Fed Powell testimony today and tomorrow with Congress, which would give you further cues about the monetary policy going forward. In the meanwhile, while we did see a knee-jerk reaction, but the China stimulus, a 10 basis point rate cut, is not seen enough to revive growth. Markets see it late and much less than expectation, and that's weighing onto the street yet again. And then apart from that, you have the U.S. dollar index, which has firmed up yet again, and that's weighing onto the crude oil prices. Not just that, metal prices also saw decline in the overnight markets. So you have iron ore prices now off 2-month highs. Copper has come off after its initial gains, and you also are looking at zinc, which fell 2% overnight. Aluminum, copper, all of these metals actually declined anywhere between 1 to 2%. So all eyes now on what the U.S. Fed testimony really reveals.
All right, Manisha, thanks very much for that. We'll take a very quick break here. We'll come back. Deven Choksi will be with us of KR Choksi Securities for some specific stock talk. Later, we'll also connect with Rajiv Samant of Sula Vineyards to discuss the company's business outlook. Stay tuned.
Welcome back. You're with us on Bazaar Morning Call. Let's get our first conversation going on the markets. We have Deven Choksi joining in. Deven, good morning. Always a pleasure having you on the shows. So, before we start talking about individual stocks, I just want to get your sense on the mid-cap market, because I think the last 2 months, it's not been about the index, it's been about individual stocks. And we've seen gains. I mean, stocks have doubled in 2 months flat. So, in general, do you still see a lot of value in mid-caps? Or are you slightly more concerned with the quality, with the pace of the rise now?
Sure. Good morning, Survi. Well, in general, I would say that I think the market is buying stories. I think they are probably not getting inside the details. And those stories would be related to railways, related to defense, or for that matter, I think anything to do with the technology. I think simply without applying the numbers, they are basically buying those stories. And that is where probably one is slightly concerned about at the same time. That while underlying potentials for those companies remain high, but at the same time, the valuations are stretched in some of the mid-cap, small-cap companies. And that would probably mean that I think some of the companies would probably pay back to the investor on the market capitalization in 1 year or 1.5 year time. That kind of stretch valuations that they have given. So from that perspective, I think one has to be extremely careful about getting into the market and believing those stories, unless one has done detailed homework on those companies from the fundamental perspectives. So we believe that, yes, I think there is underlying opportunity. One will have to be selective. At the same time, I think one will have to be extremely mindful of the high price that you are paying for some of those companies. Currently, the entire rally is being fueled by the typical class of HNI investors who are shifting positions from one company to another company because of the relatively lower size floating stock available in the market. And as a result of which, I think with a reasonably good size of money, I think that they put in, I would think that I think they are basically making the killing out of it. So that is where one will remain a little bit more cautious at this point of time.
Okay. Deven, hi, good morning. I don't know if this is a believable rebound, but there is a rebound nevertheless in some of these large tech companies, right? So this week, for example, Tech Mahindra is up 3%. HCL Tech has rebounded about 2-3%. TCS, Infosys has seen some buying. Do you think this is just a dead cat bounce, or is this something that you would want to put some money to work in, the technology space now?
Good morning, Sonia. Well, I believe that I think the technology is one space where probably I think you will have to stay invested. And this is the opportunity that you are getting currently because of the external environment in the global market remaining uncertain. You're getting an opportunity to buy some of the good quality stocks at a valuation, which is probably, I think, far more comfortable than ever before. Likes of Infosys available to you at around 17-18 forward P. I would think that my downside is probably limited in this kind of a business. Given the fact that the opportunity basket is growing for most of the technology companies, particularly the niche players in mid-cap space, I think are definitely having relatively better visibility. But the fact that the larger players like Infosys, TCS have a good amount of large size contracts, which are giving them the sustenance power for next 4 to 5 years. I think given those kind of contracts that they have signed up, though they may have probably slowed down in recent months to a certain extent, but still it is not taking away 15% kind of a growth for these companies in a normal situation. So from that perspective, I would think that the current valuations are giving an opportunity to buy into some of the good quality IT stocks, technology stocks, where I believe that the trend will continue to remain favorable for them as far as I think the prospects are concerned going forward.
Devin, it's also, I mean, another way to look at the market is that nothing stays down for very long. Underperformers, like, for example, take the life insurance space, which is starting to make a comeback. Even the asset management space. I mean, we saw what happened with HDFC AMC, and we'll have something that Kotak has put out this morning with our research team in just a bit from now. So that is another way you can do it, right? I mean, you can go after momentum, but then, as you said, you got to constantly move, you got to constantly shift and be watchful. Or you try and buy where there has been lack of interest and stocks are still down, and wait for momentum to get into that space. I mean, anything comes to your mind? I was looking at, for example, these EMS companies, Dixon, Sirma, Keynes, Amber. This quarter has been exceptional, 60-70% gains quarter to date, and 15 days to go for the end of the quarter, Deven. Anything comes to mind?
So, Prashant, all those companies remain extremely promising and they are quite attractively positioned as far as I think the business outlook is concerned. They have relatively, I think, a good amount of order book in place at the same time. However, I think the bigger challenge continues for investors, particularly because of the larger amount of, I think, the valuation that you are paying for. And that is where I would think that I think one will have to remain a little bit more watchful. I'm not against, I think, the thesis that the companies are remaining fundamentally very positive, but at the same time, the valuation that which they are quoting, somewhere I'm not fully convinced about it. Maybe I think in the market corrections, whenever it happens, I think that would be the better time to buy into some of these stocks. I would rather stay with those ideas which you probably started mentioning about, say, for example, insurance business, say, for example, credit lending business, where you are seeing higher amount of growth continuing at the speed of around 20% or so. You are seeing this 20% plus kind of a growth in housing finance business. You are seeing 20% kind of growth in the new business premium that insurance companies are collecting on the life insurance side. I would think that I think these are relatively stable businesses and they give visibility to me for next 3 to 5 years. So would buy into those companies because they are also available at a valuation, which is probably giving me margin of safety comfort, if I may to put it, from my portfolio building perspective.
All right, Devin, stay on. We have lots more questions for you, but let's get our first corporate conversation off the block as well. And the company we're looking at right now is Sula Vineyards. Now, Sula has launched 3 new luxury villas in Nashik at their properties. And in other news, Kotak has initiated coverage on the stock with an ad rating and a target price of 500, which actually is not too far away from where the stock is right now. It's close to 470. Kotak saying 500. Stock has had a fantastic rally. I mean, the chart says it all, 42% in the last 3 months. Rajiv Samant, MD and CEO at Sula Vineyards, is joining in. Rajiv, good morning. Great to talk wine first thing in the morning, right? I'm all for it. But,
good morning.
That's on a lighter note. But I found that announcement pretty interesting of you launching more properties, at your lands in Nashik. Now, correct me if I'm wrong. Right now, if I look at it as a year basis, your wine tourism business is about 9-10% of the total revenue. And I think that is where the hospitality part pretty much goes in. Now, with the launch of these 3 new properties, what's the intent? I mean, do you want to go to a 30-40, a 30-70 mix, a 40-60 mix? What's the long-term trajectory? And in the short term, what are occupancy levels looking like? What are average rates looking like? Because we know hospitality has been booming, and how?
So this is a terrific business for us, an extremely profitable business. And this is really the place where we introduce so many Indians to wine for the first time. You might be aware that our vineyard is the most visited vineyard in the world, very possibly. And last year we had about 120,000 unique individual tastings there. So really expanding the wine universe. When you say that hospitality is 10% of our revenue, what that masks is the wine sales that we do there, which actually appears in our accounts in our regular wine sales, which adds another 5 or 6%. So really, the entire wine tourism business, including the wine we sell on site, is more like 16 or 17%. Now, our overall business is growing in strong double digits. So I don't necessarily see hospitality reaching 30%. But as you know, it's so difficult to get a room in our resorts on the weekend. It's so successful. It's 100% occupancy most weekends. So we really needed these new villas. And these days, villas, luxury villas, beautiful view, heated pool. This is what people are looking for. We already had one, which was a huge success. You can never get room there. So we thought it was time to add a few more, many more options for those of you who want to visit Nashik and can never find, the occupancy. So we have about 100% occupancy on weekends, probably more like about 60% during the week, which lands us up anywhere a nice 80% plus occupancy generally.
Rajiv, we are still waiting for that invitation to the CNBC team that you promised us for. It hasn't come through just yet.
It's an open invitation.
You have to
give me the date. You have to give me the date.
I'm the wrong audience because I'm a teetotaler. But yeah, you have a lot of the others who can perhaps come and get their money's worth there. When we spoke to you the last time around, you said that premiumization is a big theme for you now, and that's a big growth trigger as well for the company. Tell us a little bit about that. What is the scope that you see in, higher priced wines in terms of how much could it contribute to your overall business? And does it bring about some margin levers as well? Can you do better margins in FY24?
So Sula has really been concentrating on our premium business. We consider our premium as being wines priced in Maharashtra at 700 rupees plus. We call those our premium, and then elite segment, which is 1,000 rupees plus. That has been growing far faster than our overall business. So if you take a look at over a 4-year period, every year around 100 basis points is being added onto the premium and elite. So it's about 400 basis points more, 500 basis points more over the last 4 years. And that much is less the share of the economy and popular category. So Indians are drinking more wine, of course, and more they are happy to reach for 1,000 rupee or 1,200 rupee bottle of well-made Indian wine. And of course, Sula leads the pack with our new Source range, which is a huge hit, especially with the rosé. Considered possibly India's best rosé wine, the Source rosé, and then our Rasa range of very fine high-end reds. So the Rasa Cabernet Sauvignon is one of our fastest growing wines today in our portfolio.
Rajiv, you're already making me get into weekend mode. I mean, there's so many names coming up and so many different ideas coming up. But sorry, before I hand it over to Prashant, just to go back to the first point, the hospitality revenue right now is 10%. Let's leave the wine sales out of it. I mean, let's just stick to hospitality, wine sales separately. How much will that 10% go up? Now, you've launched 3 new properties. Given the pricing, that 10% becomes what, 11, 12% this year? And what does that mean for the margins, given that these are premium properties commanding, I think, top-of-the-line rates?
Yes, so you should see a couple hundred basis points up. Be it in our tourism business, not including the wine, which is another, as I said, another 500, 600 basis points. And yes, this is a much higher margin business for us, and it's an asset-light business. So these villas, Sula has not put in the capex to construct them. We have our business partners in Nashik who put in the capex, who build them for us, and then we lease those and we operate them. And you can say we put in the wine software. That's really what we do. We do not intend to really become a big hotel and hospitality business. Wine is our main aim, and you know that we dominate this business, and there's tremendous runway for growth ahead in India. We see this as the most exciting market for growth in wine over the next decade in the world. That's what we're really looking at. That's what we are on the cusp of here. And our resorts are a way to enable people to come to the vineyards and to taste wine in their original element as they were meant to be tasted. That's really what we are looking for here. We are not aiming to compete with the likes of Taj and Oberoi or even Saffron Stays or Lohono.
All right, got it. And that'll be, I think, a relief to them. Rajiv, hi, good morning. I have a simple question. Very basic question for my understanding, and maybe helps investors as well. So you did about 550 crores in revenues in FY23, right? Does the amount of land that you need to, which grows the grapes which you make into wine, for 550 crores to go to say 1100 crores, does the land under cultivation also need to double, or it's not linear in that sense?
It absolutely needs to double, but I want to just point out that we have pretty much an infinite supply of wine. So just take Maharashtra, there are something like 1 lakh hectares of grapes. Now, most of those are table grapes, but wherever you grow table grapes, there you can also grow wine grapes. And Maharashtra doesn't have more than 1,500 hectares of wine grapes at this point. So we're talking about only 1.5% of the overall grape acreage is wine grape. So there's a huge runway. Every time one of these table grape vineyards, the farmers, it comes up for replanting, they always approach us and ask us, is there any scope to replant some of this acreage with wine grapes? So right now, in fact, we have more demand for planting our vineyards than we can actually allocate the supply. Of course, we don't have any of our own vineyards. Again, we have an asset-light model in terms of vineyards and viticulture. Our farmers are our partners. The grape growers of Maharashtra and Karnataka, they are the ones who plant for us. And we have a lot of farmers very excited and very willing to plant for us.
Right. Rajiv, so you're saying that land is not a problem at all? I mean, it'll...
Not at all. 1 lakh hectares of table grapes. You know that Maharashtra is one of the top grape-growing regions in the world.
And you need wine grapes. You need wine grapes to make wine, or you can use other grapes to make wine as well?
So you can use the table grapes, your regular Thompson seedless, etc., to make the cheaper wines, where you don't necessarily have to give the complexity. People are just looking for a nice sort of innocuous, sweet tasting wine. So our wines that cost less than 600 rupees are mostly made from table grapes. And that gives us a huge advantage because that is, there's about 10,000 times the supply that we actually need. It's open market.
Rajiv, sorry to interrupt you. Due to paucity of time, I just want to squeeze in one last question. The last time we spoke with you, you said that you are looking to reduce the promoter pledges. I think 10% of the 28% held by promoters is pledged as on March. Any plans to do that in FY24?
I got to say that I don't have the exact answer to this, but for sure the promoter pledge is not going to go up. We're going to be talking to our bankers and financiers soon to ask them to bring it down. Given the stock performance of Sula, there's no need for that pledge to be that high.
Okay, all right. We'll leave it at that, Rajiv. Thanks a lot for joining in. Appreciate your thoughts and all the best with your wine tourism business and, the way forward for overall Sula Vineyards as well. Let's do one thing. Let us take a quick commercial break on that note. On the other side of the break, we'll get the pre-opening rates and we'll try and get you some more stocks that are in the news. Stay tuned.
Okay, welcome back. We were 9 minutes away from the pre-open session. Anuj is here in the studios with a quick check on things. Anuj, what are you watching out for? Morning.
Morning, Prashant. Well, the buy call worked yesterday. It was, that conviction call and market ended at high point of the day. 5 reasons why it happened. And, I think one more reason is happening right now on the bottom of the screen. First reason was the successful defense of the 10-day exponential moving average. Normally in an uptrend, you defend that. I think most important was what happened with that 5,000 crore block deal of HDFC AMC. I mean, just telling you the kind of appetite that you have for stocks. Even in a sector which is not really your favorite sector or has headwinds, you saw without any slippage a big block deal getting absorbed. Same has happened, by the way, with Shriram Finance right now. Of course, that's a stock where you have sectoral tailwind. The broad market is showing no signs of weakness. The market was oversold in F&O and the Fin Nifty expiry that helped for 5th day running. Now, the big question is, do we hit all-time high today? And more importantly, do we sustain above that? I think excluding IT, most of the sectoral indices are already at lifetime high. The mid-cap index has been hitting lifetime high regularly. the opportunity is in small cap index. The small cap index is still 10% away from all-time high. And I tell you something, if interest rates start to drop from here, I won't be surprised if over the next 2 years, small cap index maybe even doubles from here. It's the kind of opportunity that you have in the small cap space. Auto and FMCG are the leaders. I'll keep an eye on Nifty IT once again. It's a 200-day moving average. HCL Tech has hit fresh 52-week high. That's very interesting. So let's see. But I think the stock that I'm watching out from here on is actually HDFC Bank. That could well be the clincher for the market from here on. It could have bottomed out. Maybe a bit early to call that, but it could have bottomed out. I think the first upgrade that you have today from Goldman Sachs is first of many that you would see over the next many days. It looks like the selling has been absorbed here. If it starts to rally, the Nifty Bank can end its underperformance of last 1 month. And one more reason I say that is if you look at the HDFC Bank ADR, which had gone into a bit of a discount at one point, it's now back to a 16% premium. Very quietly, the stock's been falling in domestic market, but there's no sign of fall in the ADR market. It's 16% premium. So again, that's giving me a signal, maybe a bit early, but that could be the stock which leads the next round of rally, and that would help the Bank Nifty as well.
All right, Anuj, thanks a lot for that. By the way, Piramal Enterprises, now that deal seems to have been done, likely to have sold its entire stake in Shriram Finance at 1545 rupees a share. So that large trade has happened. About 3.2 crore shares have changed hands in a block deal window, so do keep your eye out on that. Devin Choksi is still with us, so let's get back to him. Devin, the stock I want to ask you about is Apollo Hospitals. It's had a dream run this year. I mean, this month the stock is up about 12%. And, you know, the management, of course, is very bullish on the whole digital arm, the Apollo 24/7 business. And JP Morgan put out a note, I think a couple of days ago, where they said that there is a big supply shortage in the industry, which is offering a very promising growth prospects for the current incumbent players. Your thoughts, is the risk reward still favorable for Apollo Hospitals?
So, Sonia, I don't know about, I think, the valuation aspects. I feel that the valuation has always remained on an elevated level. What I am particularly, concerned about is, the kind of money that this kind of business will keep on requiring for expanding the business. So from a shareholder's perspective, the money, free cash flow is definitely not going to be available, because the expansion of the new rooms and new businesses, will continue. New properties will have to be continued, particularly for hospitals. So that is probably, going to take away larger part of my cash flow if I'm an investor into the company. That is bothering me to a certain extent, and that is where probably I'm mindful about paying the valuation to this kind of companies. So there is no doubt about the growth that they are putting across, the number of beds that they are commissioning with a good growth plan that they have. So there is no doubt on that particular aspect. But this concern which I expressed, remains with me. So not very, very gung-ho about buying into it at a higher price.
Okay, got that. Devin, before we sort of let you go today, we were just talking to Sula, had that detailed conversation. Your thoughts on either that stock or anything else? Let's say if you want to play something in the urban discretionary consumption basket, which stock would you go with?
So I think Surbi, Varun Beverages is one company which possibly we have been liking. Of course, the stock has its own run-up also in recent times. But in a couple of months back, the stock was probably available at a relatively more comforting levels. The largest bottlers is a mainline story that they have. At the same time, the growth prospects, underlying growth prospects remain very strong in this particular company's business plan. That is where we like this particular company. If I have to compare on a like-to-like basis some of the companies, Sula. Maybe this is a little different, but yes, we like this company from that perspective.
All right, Varun Beverages, look at that rally, 100%, over 100% in the last 12 months, been one of the biggest movers. Sula not too far behind, so people love their drink, it seems, and the stocks that are associated with it. We'll take a short commercial break. We'll come back with the pre-opening rates. Also, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. In a bit, Rajesh Palvia of Axis Securities will also be with us to discuss some F&O strategies. Stay tuned.
Welcome back. So we are going to be getting our pre-open rates any second now. In fact, they're trickling in 40 points up if you go by the pre-open Nifty immediately. But let's wait for it to settle. Let's see how this plays out. right now. Wipro, Tata Motors, Tata Steel, these are some of the stocks on the upside. So that's pre-open just kicking off. Good time to bring in our technical experts as well. We've got Sudarshan Sukhani as well as Mitesh Thakkar with us as always. Gentlemen, good morning. Great to have you on. Sudarshan, let's start with you. Yesterday, the market managed to make a very, very smart recovery from the lows. That's commendable. But once again, global cues are not very supportive today. So what's the index call?
Good morning. The Nifty is in a trading range, and that range is going to last for some time. So the chances are that we will move down towards support and up towards resistance. Inside a trading range, there is not much trading that is possible, and not much trading should be done. So the real trade will come if we break 18,900 on the upside, and then also we need a lot of patience to see that it is a real breakout. The Nifty is not at 16,800. It's at 18,900 or 18,800 now. So long trades now need to be taken with a lot of care. I would suggest that the market is in a range and it is best avoided. The Nifty is still a buying opportunity for intraday traders. If it dips towards 18,700, keep a 50-point stop loss and try to go long in the Nifty for an intraday trade, but nothing else. The Bank Nifty is a complete avoid despite yesterday's rally. It's giving very clear signs of distribution. Stay away.
Okay, stay away from the Bank Nifty. Got that. I guess that's some sane advice coming through, because give and take everything, the Bank Nifty has seen a big fall in the last many days. Mitesh, would you concur that even if you're long on the index, you should keep your hands off the Bank Nifty, considering the kind of weakness that we've seen in the last many days?
See, I think, I would not term it as a very classic case of a weakness. My sense is that the indices, are kind of overbought and are just therefore chopping around with some kind of sideways activity. The Bank Nifty, for example, while it's been underperforming, no doubt about that, to the Nifty in the last few days, but it hasn't given a very big breakdown on the charts. I think the key support areas of 43, 400, 300 zones still held on. And similarly, Nifty also, just kind of flirted with the 18,650 mark and managed to bounce back. So I think till that breakdown happens, then I think, I look for a corrective decline or a pullback. The idea is that because of the position of the indicators, in case the breakdown doesn't happen, then the markets will be in range, they will contract, and till then the indicators will cool off and then be ready to start again. So I think this is a phase when, you basically, if you are driving an automobile, you change the gear, you press the clutch, and now you are supposed to change the gear. Whether it will be on the upside or on the downside, we'll see in the next few days. But broadly, it's a pause kind of a phase, and therefore I think, the markets, and that's what I've been advising for the last few days. I think avoid the index. There are clearly signs of slowing down. When it's made a fresh high, that big bump of momentum is missing on the Nifty, and the Bank Nifty is clearly underperforming. So they're basically consolidating, and I think trading is clearly more stock specific.
All right. Mitesh, so what in stocks would interest you? Where would you want to put those trades on?
On the stock side, morning Prashant, I have today 3 buys to a sell. HCL Tech, I think Anuj mentioned that it's made a fresh swing breakout. That's a buy with a stop at 1154 for a target of 1200. ICICI General Insurance, and we've had buys on HDFC Life and ICICI GI earlier as well. Now it can be bought afresh with a stop at 1274 for targets of 1335, and a buy on Atul Auto with a stop just around 7,000 for targets of 7310. And one sell call, that's Concord. Keep a stop at 649, look for targets of 610.
All right, and how about you, Sudarshan? What would your call be today?
Well, it's primarily on the buy side. ABP is a buying opportunity. It's breaking out of a trading range. Buy with a stop under 42.85. Bajaj Auto is a buy. Now, the Bajaj Auto has actually been falling. This could be a brief correction. We'll find out if it goes up. Then it's a correction. But keep a stop at 45.20. It's worth buying that dip. Then I have Persistent. Persistent is in trading range similar to Bajaj Auto, decline range. This could be a correction. So then we want to go long on a dip, buy with a stop under 48.50. And finally, I have PVR as an intraday short. PVR is in a mess. The chart itself is fairly bearish. So it's an intraday short with a stop above 14.29.
Okay, just a quick view on Piramal and Shriram. So let's just have 4 minutes into pre-open. So I think we are starting to get an indication. Shriram, I think, is up 10%. And the Piramal stock will also come up. Piramal was up about 6%. Piramal Enterprises, that is. Piramal is up 7.5% and Shriram is up. So in one stock, the overhang goes away. Remember, Piramal used to own stakes in 3 Shriram companies, 2 listed, 1 unlisted. And of course, the merger happened. City Union and Shriram Transport, Shriram Finance, and the resultant stake was in that company, and now that is out of the way, and one gets the money, for the other the overhang is out, and stocks are up sharply this morning. Similar kind of pictures, we saw something in HDFC AMC yesterday. Any thoughts, Mitesh, on these two names, Piramal and Shriram?
Yeah, I think Shriram Finance is something, which I do like. Piramal, I'm unfortunately not tracking, so I'll not have a view over there. But if you look at the charts of Shriram Finance, I think, this is a stock which is given a big breakout day before yesterday with a gap up, and then it was consolidating. But today, yesterday, it picked up and has started moving up. Now, it has completed what I would call the classic, cup formation or rounding formation on the weekly charts. Typically, this will give you measuring targets of around 1900 plus. So, extremely positive on the chart of Shriram Finance. And this week's low or the gap up level, which was around 1450, I think is my trend reversal point. So, you can buy here, add more on 30-40 point kind of a decline, and keep a stop below 1450 and look for a positional swing kind of a target of around 1900.
Okay. By the way, just want to mention, thanks Mitesh for that. Thanks for joining in. Shriram Finance is the big mover, up almost about 10% right now. Just want to mention a couple of more stocks. Subros is one stock that has been in upper circuit for the last couple of days. Yesterday, Subros was up 20%. Today as well, in all likelihood, it will be. At least that's what the pre-opening rate is suggesting. And as we were telling you, all truck cabins will now mandatorily have to have air conditioners from 2025. That's what Union Transport Minister Nitin Gadkari has said. He's issued an approval for that. So Subros, manufactures air conditioners for trucks, for passenger vehicles. Hence, it would mean more business for them. That stock is up another day in the green. And a couple of other names actually in the broader markets. Excuse me, something like a Jamna Auto also looking pretty good. Rajesh Palvia is waiting by to give us some cues in the derivatives space. So let's go straight to him. Rajesh, what are you looking at today in terms of individual names?
So, good morning, Sonia. So, stock specific, we are bullish on LIC Housing Finance. Stock has given a breakout above 200-day moving average, and the kind of buying action we have witnessed in the previous session. It clearly indicates that the stock can move further higher from the current level, and possibly we can see a target of 405 to 410 in the continuation of this pullback. One can keep a stop loss of 382. Another stock which we like, that is from healthcare space, that is Metropolis, is looking very attractive. Stock managed to view breakout of its multiple resistance zone area, and a long build-up was there in the previous session. So looking at the setup, we believe that Metropolis can scale up further higher. 1490 to 1510 could be the possible target in the near term. One can keep a stop loss of 1400. And the third stock is from FMCG space. We like Godrej Consumer Product, and stock is continuously moving in higher top, higher bottom formation, and the recovery which we have seen in the previous session is clearly indicating that stock will resume its uptrend, and possibly we can expect a target of 1120 to 1130 in the continuation of this uptrend. One can place a stop loss of 1055 to buy Godrej Consumer Product.
Okay, well, Rajesh, thanks very much for that. Well, time for our momentumizer idea of the day. Mangalam is standing by with that. Mangalam, hi, morning.
Good morning. So the stock on my momentumizer list today is Rosel India. It was up around 3.5% yesterday, but I was looking at the move on the stock. This month itself, it's up around 22.5%, and in the last 12 months, it's more than doubled. Importantly, it's gaining on huge volume. So I was trying to look at, what the company does. So it's got two sources of revenue. One is black tea, and the other one is aviation products and services. Divergent as they are, over the last couple of years, their revenue contribution from tea is coming down. So FY13, tea accounted for nearly 90% of their sales, and now that's come down to less than half of their sales itself. Whereas aviation business is increasing in contribution from 100 crores in FY19. We've seen FY23 aviation business come to around 186 odd crores. All of this with the company's debt coming down from 195 crores a couple of years ago to a little under 150 crores now as of last year as well. The promoters hold around 75% stake in the company, with institutional shareholding increasing in Rosel India as well, which was nothing as of September 2021, but has come to over 4% as of the last reported number. So what are the key triggers to watch out for? The aviation business is largely out of the country right now. So increasing contribution coming in from aviation, from their domestic maintenance, repair and overall business is something we'll be watching out for. Defense supply in India is something we'll be watching out for. And finally, demerger of two divisions for value unlocking.
Okay, all right, Mangalam, got that. Thanks very much. That's today's Momentumizer. By the way, I just want to point out one more stock in the pre-open. Check Subros. Yesterday, Subros ended up on 20% circuit because Mr. Nitin Gadkari made that point about air conditioning in the cabins, in the truck cabins. Today in the pre-open, it's suggesting that we could get more follow-through buying there. So that was a big, big mover. We'll keep an eye out on that. Nimesh, I think, is with us as well for the standout brokerage report of the morning. Nimesh, which stock is it?
Hi, Sarvi. Today's standout is on Divi's Labs. Yesterday, Kotak had a sell report, and today, BofA Securities has downgraded the stock to underperform from neutral, and they cut the target price in Divi's Labs to 31.50. Now, they believe after the recent run-up, the stock is now trading at 56 times FY24 estimated earnings, and there is a risk to the downside. Now, while the synthetic projects will drive the earnings in FY24, but the pace of the earnings could be much slower than what the street is expecting, and that's not priced into the current peak valuation. So that's the reason why they've downgraded the stock. Now, they see FY24 and FY25 margins to be in the range of 30 to 33%, which is higher than the first half margins of 25-26%. But the pace of earnings is going to be slower than estimated, and hence they've downgraded the stock now to underperform from neutral, and they've cut the target price in Divi's to 31.50 now.
Okay, thanks a lot for that. Well, Vivek is also with us to talk about Shriram Finance and the MSCI impact. Vivek, over to you.
Well, that's right. So, post the block deal that just consummated, where, we understand that it was Piramal Enterprises that sold their entire 8.3% stake in Shriram Finance. Now, what we are analyzing is the impact of Shriram Finance and how will index providers like MSCI, FTSE as well as NSCI index providers, how will they now treat Shriram Finance after this particular block deal, given the fact that the free float has now increased? So as per IIFL Alternative Research, what we understand is that in the MSCI index, remember Shriram Finance is part of the MSCI Standard Index as well as FTSE indices. So in MSCI index, the stock is likely to see inflows of close to $45 million. In the FTSE index, the stock is likely to see inflows of close to $23 million. And both of this will happen mid-review season itself. Lastly, within the NSCI indices, now very interestingly, Shriram Finance actually in terms of the average weighted market capitalization ranks 101. So what they believe is that the stock could likely be an inclusion into the NSE 100 index, where once again, tracking flows could come in. So all of this will also keep Shriram Finance in spotlight today.
All right, thanks a lot for that. So that's on Shriram Finance. But Surbhi is back with us to talk about the AMCs and why she's watching that one. Surbhi, over to you.
So HDFC AMC was in focus yesterday on the back of the news flow that Aberdeen has sold its entire stake in the company. Now, interestingly, apart from the small cap World Fund and Society General, who were one of the buyers, SBI Mutual Fund was also another buyer of this block deal, and it is one of the competitors for HDFC AMC. So Kotak has also written on AMC as a whole, and they are quite positive on that. In that space, they say that the undue investor concern that the high pass-through of the TER cut with the distributors has a high bearing on AUM growth. But they say AUM growth is likely well protected from the induced churn, and the incremental flows are much more responsive to the performance rather than the lower commissions. They say for HDFC AMC, the flows have been meaningfully revived in the last 6 to 12 months compared to the industry despite the lower commissions. And any impact on the growth due to the lower commissions could be compensated through stronger alignment with the new parent. They have a positive view on all the 4 AMCs with an ad rating on Aditya Birla, HDFC and Nippon AMC, and a buy rating on UTI AMC with a target price of 800 rupees.
All right, Surbhi, thanks very much for that. So keep an eye out on that big move on HDFC AMC yesterday, as you pointed out. Blue Dart in focus. Mangalam is here with more. Mangalam.
Motilal Oswal has upgraded Blue Dart this morning, and they've upgraded it from a neutral to buy. That's largely because the stock, one, has corrected 30% from the highs. Secondly, it's attractive right now, largely because 40% of its costs are aviation turbine fuel, which has also seen a big correction. So they stand to benefit from that. In the second half of this year, they expect that the 2 new aircraft that the company have added will also aid their volume. So which is why they have a target price of 8,040 on the counter.
All right, thanks a lot, Mangalam, for that. We're just heading into the market opening, and looks like it's going to be a decent opening for the market, up about 30 odd points on the Nifty. We're still just 40 points away from that all-time high, so we're pretty much flirting with those levels. Do we get there today? Do we hold above that? Time will tell. But for now, the mid-cap index is looking like it's going to have a pretty strong showing this morning. Let's see how things go from here. A lot of individual stocks in focus, and let's get straight to that very quickly. The Nifty, the first tick is in the green, so up about 20-odd points. The sensex is up about 100 points, and the mid-cap index is up 250-odd points. So a decent opening, you'd have to say, for the frontliners, but all the action yet again is in the broader market. Zooming away now on the mid-cap index, up almost 1%, 0.8% to be precise. In the frontliners, as I was mentioning earlier, IT is making a bit of a comeback in the last few days. HCL Tech, TCS, Wipro, are all your top Nifty gainers. Is the worst over for the IT sector? We don't know yet. But for now, there's definitely some buying action that's picking up there. Apart from that, cement is seeing its share of buying. Ultratech Cement is up about 1%. Dr. Reddy's has been a pretty strong stock. In fact, this year, Dr. Reddy's is now up about 20%. So, it's notched up a goodish amount of gains. And some of the auto stocks, Bajaj Auto, Hero, Eicher, are all doing pretty well, up about 0.4%. In fact, the headline index may be flat, absolutely quiet, but plenty of stocks are at fresh 52-week highs. Tata Motors is at a fresh high this morning at 583 rupees. It's now up 50% for 2023 already. Exide is at a fresh 52-week high. L&T Finance at a fresh 52-week high as well. And plenty of other stocks. Britannia is sitting at a fresh high too. So this entire FMCG pack is looking pretty good. But on the downside, what's dragging is Divi's Labs. Divi's is down 1.5%. As we were telling you, there's a downgrade from BofA Securities which has come through. JSW Steel is down about 1%. Hindalco, Cipla, Sun Pharma are all in the red. So Pharma is taking a bit of a backseat this morning, apart from which Axis Bank is also down about 0.3%, dragging its feet. Reliance is the one that's just playing spoilsport, preventing the Nifty from getting to all-time highs. Reliance absolutely flat with a bit of a negative bias. But other than that, it is a quiet market, just buying time, around this 18,800 mark, consolidating at these levels. But the real party is in the mid-cap.
I was just going to say nothing quite about the mid-cap opening and the mid-cap markets, right, Sonia? Look at the index go. I mean, straight away, 1% higher. Nifty is doing nothing, zilch. Mid-cap index at the open up 1%. That's just the extent of the momentum out there. Z is trying to recover some ground. Yesterday, Z ended 6.5%. A lot of people raising questions on the future of the Sony Z deal now, given that things are really stuck in court. Anyway, that stock started positive for the time being. Piramal Pharma. I mean, let's go over the newsmakers first of all. So, Piramal Enterprises actually and Shriram Finance are the stocks where there's a 10% up move immediately after the block deals. Subro is the stock that Sonia and I were just referring to. Another 20% circuit on Subros. 20% yesterday, 20% today because of this mandatory AC cabins in commercial vehicles now. So that's a stock that's in a sharp focus. Thyrocare after the block deals continues to find some traction, 2.5% up. GR Infra Projects, they've announced a couple of order wins. That's a stock up about 3%. So it's really, really buzzing out there in the mid-cap market. RVNL, which pretty much is saying that, look, we're still in the game. Don't write us off with respect to that Vande Bharat order. That's a stock up to 2.5% as well. So quite a few moves in the mid-cap market, at least for the time being. But on the large-cap screen, Prashant, I mean, there's not much changing. It's very difficult to spot sectoral trends as well. I guess absolutely clueless, directionless, at least for now.
Looks like it. One name which is coming up on the downside is Aptus Housing. I mean, that's a small housing finance company. I'm not sure if there's a block. Maybe there is a block which has happened. Volumes are huge. And by the way, in names like Aptus and, Home First, etc., there are private equity investors who... and there has been this talk, and we put this to the managements quite a few times when they've been on the channel, whether there is intention to sell, etc. It's been expected, anticipated, but maybe something has transpired.
Yeah, there is a block, Prashant.
Yeah, there is a block. It's down 7.5%, 246. Okay, now, so that's on the downside. But on the upside, apart from what we've already mentioned, look at Z. Z sold off 7% yesterday. It's coming up 6% this morning. It's the second largest volume traded name across the board. So that is coming up. And I think there's an article in the Mint newspaper which says that, the Sony Z deal is, it's on track. That's what the headline reads. But maybe a bit of a boost there sentiment-wise, although there is, the developments there will need to be watched. But the stock's recovering for some of the yesterday's losses. RVNL sold off yesterday. That's up 3%. We mentioned that. Exide is up about 2.25%. What else? Subros, we mentioned. Max Financial Services, MFSL. It's the underperformer in the life insurance space. HDFC Life, ICICI Pru, etc. have done much better. 2.5% higher on MFSL. Piramal Pharma, I mean, Piramal Enterprises, of course, is locked up. There was where the deal has happened, but Piramal Pharma is up about 3.5%. That has also been after the demerger. It's been a huge underperformer. But lately we've been hearing some recommending Piramal Pharma as a value buy. Metropolis is up about 2.5%. Thyrocare is up a little bit, 3% or so. CG Power is up about 2%. A rate gain, it came back above the 400 rupee mark yesterday, gaining another 4% this morning, 425. I saw Gokuldas Exports, right out of the gates. Gokuldas has reclaimed 500 rupees yesterday after some time, and I think that is starting. Okay, that's actually flat, 507 or so at this point in time. So it's a market with lots and lots of activity, but the two big ones are, of course, Shriram and Piramal Enterprises. Both are up 10% respectively. Sonia.
And a lot of these stocks, right, that have their interests across some of the newer spaces, whether it's technology, big tech, electric vehicles, once again coming back into action. Just look at something like Tube Investments. It's up about 3.5%. It's had a big rally in the last many months. KPIT Technology has come back in a big way as well. 3.5% higher on KPIT Tech. And, this month, KPIT Tech is up almost about 5% or so. In fact, for the year, KPIT Tech has put on almost 55%. So just pull up the yearly chart since the start of 2023. Big moves coming in there. Exide is also coming back in a big way. It's up almost 30% for the year now, Exide. So some of these battery makers that are making investments in the EV space are also doing pretty well. So just keep an eye out on these themes. All the new themes, exciting themes are getting action now.
By the way, railway stocks, your Ircon, your Texrail, some movement there as well that's kind of back. Aside of all the Vande Bharat issues, some of the other railway stocks also perking up. Ircon is up about 5%. Okay, it's cooled off. Started up 5, now it's cooling off right now. So is the market. The metals, Hindalco, these are names. JSW Steel, they're weak. Divi's, of course, on that downgrade. So I think overall, fairly muted start to the day.
As stocks are coming up, right? I mean, the reclaiming levels. Look at something like a Muthoot. It's not a big move, but it's back above 1,200 rupees after, I think, some time. So leave no man behind. I mean, leave no stock behind. And that seems to be happening. It's a rising tide lifting most boats. Of course, Muthoot has indicated, better trends over the last 2 or 3 interactions, saying that competitive intensity, etc., has gone down. But there is a fair bit of traction now across the board. By the way, the Nifty's picked up. It's up 18 points from being flat, 18,835. Manishi Ray Chaudhary is now joining us, Asian equity strategist, Equity Cash Asia Pacific at BNP Paribas. Manishi, good to have you with us here. There was a note from Sanjeev Prasad of Kotak saying that the rally in broader markets and the way we've seen over the last 1-2 months kind of is making it harder and harder to find ideas. Although when you look at price action and the way stocks are being bid up, I don't think there is any dearth of ideas, at least momentum. What do you make of it, especially the move in the broader markets, Manishi?
Right. So valuations are a bit.
Okay, I think we are having some issue with the line. We'll try and fix that and go back to Manishi in just a bit from now. Some technical difficulties, what it seems to be. Okay, Manishi is back with us. Let's give it another try. Manishi, go on.
Right. Sorry, yes, I'm back. Thank you. And, I think, the valuation question that you raised, that is justified. Earlier, not in the last couple of weeks, but prior to that, the rally was essentially in the large cap frontline names. And therefore, when investors try to search for ideas in the frontline names, maybe in the top 50 or top 100 stocks, valuation could be a bit challenging. But at the same time, I think now what we are seeing recently over the past 2 or 3 weeks are the mid caps and small caps catching up. And that could happen going forward. I mean, I think the next leg of the rally is being led by the mid caps. But at the same time, from a foreign investor's perspective, the kind of investors that we interact more with, that struggle to find attractive ideas in India at a reasonable valuation could be a challenge, because the relative valuation, valuation premium rather, which had actually contracted quite a bit in March, April, have picked up again. It has gone above the one standard deviation level. So, I think for the near term, the market could take a bit of a breather, maybe what's called a time correction in the stock analysts' parlance. I think we may be looking at that kind of a scenario throughout summer.
Okay, so time correction perhaps on the cards. For as long as I've tracked the markets, I've understood that time corrections are perhaps the best time to accumulate individual stocks. You get a chance to buy stocks, not when the market is soaring and not when the market is falling, right? So tell us, what should you be buying at this point in time? In the consumption space, autos have been doing very well. And there's this theme of how exports have bottomed out. The worst is behind us. Within that theme, anything that you like?
There are three sectors in India which are seeing consistent earnings estimate upgrades. The first are financials, which the consensus earnings estimates have been upgraded almost 10% over the past 6 to 9 months. The second are industrials, where I think this whole, idea of increased infrastructure investments and therefore spilling into private capex at some point of time, that idea is now picking up. And the third are consumer discretionary, then that is where autos fits in, what you pointed out just now. So consumer discretionary, that include white goods, includes jewelry, includes automobiles, particularly four-wheelers, not so much two-wheelers. So these are the sectors that we are also looking at. In fact, in our Asian model portfolio, if I look at the India sliver in that, these are the three sectors that we have presence in. And in addition to that, we also have a presence in TMT, the tech and telecom universe. Even though tech has been a bit muted over the last 6 months or so, there have been some, sort of, I wouldn't call them warning, but cautionary stance sounded by some of the frontline companies as far as order inflows are concerned. But we still like that sector, in view of eventual recovery in order flows from the developed world.
All right, got that. Manishi, hi, good morning. I want to get your sense on life insurers, because that's been one red hot area of the market after it was practically written off, in February after the budget. And now suddenly the market seems to have, taken a liking to it. What's your sense and what are your recommendations on life insurers, or insurance in general, actually?
Right. So, when I talked about financials, with a consistent earnings upgrade, I actually include the life insurers in that bucket. We have, quite contrary to the market perception right after the budget, we have actually liked the life insurers. And, we have, not too many, but I think just one frontline life insurer among the India stock selection bucket that we have in the Asian portfolio. We believed that right after the budget, because of the the changes in the tax policies, the sector was beaten down too heavily, and that was unjustified, because the essential story here, which is of increasing penetration and the earnings growth driven by higher interest, higher returns to the life insurers, that story actually stayed intact. And I think the market is actually coming around to that view.
All right, before we let you go, what would the mega theme or the big trend be for the rest of 2023, you think, especially from an equity market perspective? Are you looking at any big themes? Of course, some of them have played out, whether it's something like defense or even electric vehicles. Anything else that you like?
I think in general, one should look more at the infrastructure and industrial, that space. This consumption story has possibly, I wouldn't call it played out, because this is a multi-year theme as far as increasing consumption and increasing penetration in India are concerned. But industrials, both in terms of increasing government capex and eventually increasing private capex, maybe even defense capex, these are the themes that investors would have to more actively look at right now. I think, it started performing, but it's still early days there.
Shriram Finance, by the way, is up 12%, 12.5% now, I think. So it's moved up a little bit more. The high which has been made is almost 1,800 bucks, 1794 or so, and now at about 1750. That's a surge which has come through. Do you track this one, Manishi? Any thoughts at all? And large number of blocks happening, right? We put out a figure, right. Some 14,000 crores of blocks which have happened just in the last, I think, 1 or 2 months or so. And so people are monetizing. I mean, private equity investors, promoters at high levels, but all of it is getting absorbed in a very seamless way. Any thoughts at all, briefly?
Yeah, I think, I obviously wouldn't comment on individual stocks, but, this the phenomenon that you referred to, which are the promoters and, they're taking advantage of large blocks, it's likely to continue because, this is not only an avenue for private equity investors to make an exit, it's also an avenue for the promoters to sort of realize the value of the investments that they had earlier made. And it's now that, as a consequence of the Indian market's performance, as a consequence of the support that they're getting from the domestic flows, which has become a, routine feature of this market, that this avenue has become feasible and it's likely to continue going forward.
All right, Manishi, we'll leave it at that. Appreciate your time here on CNBC-TV18. Thanks a lot for joining in and have a great day. Well, for the market is having a great day so far. The Nifty is up about 50-odd points, just inching towards those all-time highs yet again, flirting with those levels. Remember, we're just about 20-25 points away from all-time highs. The real party is in the mid-cap end of trade, which is up almost 400 points. But on the occasion of International Yoga Day, we speak to one corporate thought leader who has been a proponent and active practitioner of yoga for, I think, over 2 decades now. Rajiv Bajaj, Managing Director at Bajaj Auto, is joining in. Rajiv, always a pleasure speaking to you here on CNBC-TV18. For as long as I've known you, yoga has played a very important role in every stage of your life, right? But I think it's when times get tough that the practice comes to your aid the most. And in the last 5 years, it's been a really tough phase for you, perhaps, with both a major health scare and a personal setback. How has yoga helped you through it all?
Well, good morning, Sonia. And first and foremost, greetings to everyone on Yoga Day. I live in Pune, and therefore I had the good fortune of being a student of Guruji P.K.S. Iyengar for the longest time. And I learned a few things about yoga from him. To start with, Guruji said that the body is universal, the mind is individual, and hence all problems of the kind that you mentioned start with the mind. And I think we all acknowledge today that, whether it's eczema, asthma, irritable bowel syndrome, rheumatoid arthritis, thyroidism, diabetes, hypertension, cholesterol, what have you, these may manifest in the body, but these are essentially diseases that are rooted in the mind. And I think yoga, simply put, helps us to calm our breath and therefore to calm our mind. And this is why Guruji would say, let the breath be your teacher. So I think yoga, more specifically the asanas of the kind that you've put on air right now, help us to use the body to turn the mind inwards, away from the stress of the outside world. And that is why Guruji would say, yoga teaches us to cure what must not be endured and to endure what cannot be cured.
That's fabulous. Rajiv, I think I have tracked not just your business, but your yoga practice over the years as well. I remember visiting the Prana Center in Pune too. And I noticed that with every passing year, the poses get even more complex. And I mean, we were just looking at some of those visuals. I don't think people 20 years, 30 years younger than you can even do that. But that's great to see. But from a business or from a, sort of a life lesson standpoint, What is the big takeaway for you over the last, say, 2 decades? What's your biggest life lesson been from yoga?
So, Sonia, first of all, please don't imply that I am old. And let me give you an example from 2012, when I had hurt my back quite grievously. I was advised 3 weeks of bed rest and possible surgery, spine surgery after that. Guruji heard of this. He asked me to come and see him. I was too scared to go to him because he was a tough taskmaster. But I was even more frightened of a knife in my spine. So I did go to him. Under his personal supervision, he made me do 2 hours of yoga. And I was amazed at myself because I was in so much pain that at home I was not able to stand under the shower for 2 minutes. And here I was doing back bends and sirsasanas. And I asked him, I said, Guruji, I feel 30% better at the end of 2 hours of yoga when I was actually advised bed rest and surgery. So, how do you explain this? And he said something beautiful to me that day that has helped me in my work as well. He said, the surgeon believes that function follows structure. If he fixes your structure, you will start functioning correctly. He said, we in yoga believe that structure follows function. If you start standing correctly, sitting correctly, twisting correctly, bending correctly, stretching correctly, then your structure will adapt, because the mind is not only in the brain. There is intelligence in every cell of your body, and every cell will adapt to the correct way of functioning. From this I learned, for example, that at work, if we focus on technology structure, brand structure, cost structure, distribution structure, organization structure, we won't necessarily function right and make a great motorcycle. But instead, if we function right and try to make a great motorcycle, all these structures will fall into place. So I learned a lot of yoga aphorisms, as I did even from homeopathy, and applied them to business. That is why I say to people, our motorcycles are as much a product of CFD and TPM as they are of yoga and homeopathy.
Oh, that's, you've learned a lot, and you express it so well, Rajiv. And that is what that is what makes it so wonderful to hear. So much wisdom there.
Thank you.
By the way, that the headstand that we were playing visuals. Actually, I was trying to see if there is something behind. That seems complicated, as Sonia also said. That is
no support.
That's perfect balance, right? Is that one of the most difficult poses, Rajiv, or?
Yes, that is at my place in Goa. There is nothing behind me except a glass railing.
Of course, there is nothing. I was just joking.
but my father would say कि शीर्षासन तो कर लिया, but he still cannot stand on his own feet.
Well, trust.
Fathers have a way of keeping us grounded, right?
Absolutely.
And Rajiv, we all remember. The veteran, the patriarch of the Bajaj family. I lost my father a couple of years ago, but the father's teachings completely stay. That's all I'll say. I'll come to the business conversations in just a bit, but Prashant, back to you.
No, I was just Rajiv. Would you like to just you said Guruji was telling you about cure, what cannot be cured, and could you just repeat that for our viewers? That bit.
Guruji said, and the choice of words, Prashant, is very beautiful. He said, yoga teaches us to cure what must not be endured and to endure what cannot be cured. So he's telling us that there's a lot that you can fix through yoga, primarily asanas and pranayamas, by turning your mind inwards, hopefully aligning it towards a higher purpose in life to find what we are all looking for, which is nothing but the joy of peace. But at the end of the day, you must also accept that, acceptance is an important part of it. There are some things that will never be cured. We are human after all. And yoga will give us the strength to cope with that.
Okay. On that beautiful note, Rajiv, now let me try and steer the conversation towards the business and towards what's really top of mind for you.
Sure.
Because there's so much happening, right? There's the Triumph launch that everyone's talking about. There's this fantastic fight in the 125cc segment that Bajaj has been putting up, gaining market share. It's been a very interesting last couple of months. And then there's the export issue with Nigeria, which has been struggling for a while. Last time we were speaking with Rakesh, he was telling us expect a pickup in July. So these are three different sort of balls I suppose you're juggling at the same time. So tell us, what is top of mind and what's the immediate focus for you when you look at the business?
I can elaborate on each of these. Triumph, I'm headed off soon for the launch in London, as I had said to all of you a few weeks back. The first two motorcycles of the many that we are developing together. Production will begin in early July. Deliveries will begin in July. Obviously, more details of the product, the prices, stuff like that will be closer to that time. But maybe in the interest of Nigel, I can say this, that we are trying our very best to hold the price closer to 2.5 lakhs than to 3 lakhs. So hopefully Nigel is happy with that. So that's about Triumph. That will roll out of our new plant at Chakan, which has already been commissioned. We call it Chakan 2. KTM production is shifted there, and we have capacity in place, I think, for about 6,000 or 8,000 Triumphs every month over there. On the 125cc segment, yes, we have consciously chosen to focus on the 125cc plus segment, so 125cc and above. I am motivated in no small measure by the great success of my younger brother, Siddharth. And if he can do so much just participating in the 350cc segment, surely we can do a lot more with 125cc plus. We've gained a lot of share. You're quite right. I think our share in the 125 is just under 30%, and in the 150cc plus sports segment, as we call it, is just above 40%. Some of that is due to the absence of HMSI in the market, though at a Vahan level, HMSI has been present. So we are quite confident of maintaining these gains as we go forward. The 100cc itself, we are less focused on for obvious reasons, and I think three factors influence that and continue to influence that. One, that's the customer whose sentiment was most impacted by the lockdown. That continues to be an issue. Two, that's where petrol prices hurt the most, and I think people are, being weaned by EVs from there more than anywhere else. And finally, yes, the premiumization to 125cc. So all in all, I would say, while Hero with 80% share over there would like to expand their core, as they call it, we are going to do everything to shrink that core. As far as exports is concerned, I will give you some specific news. From an average of 200,000 a month a few months ago, we had come down to about almost half at 110,000 a month. Last month, we were at about 120, 125. This month looks more like 140,000. Hopefully next quarter is more like 150,000. So as Rakesh has been saying, uncertainty is a big factor. I may change my view in 2 weeks' time, but right now it looks as if it's bottomed out, it's turning upwards, including in Nigeria, where there is devaluation because we expect the dollar to become available more freely. So all in all, it's looking better.
So when you said, I want to talk a little more about exports, but before that, when you said this will make Nigel happy, I thought you're going to gift him a new Triumph bike or something. All you're doing is just reducing the price a little bit, right?
Nigel, let him talk to me. I'll talk to him.
Okay, we're all looking forward to that launch, actually. It's going to be a big one for Bajaj Auto and for all the enthusiasts, right? The bike enthusiasts. But just one more word on exports. This devaluation that has happened of the Naira, it's another 30% depreciation that we've seen. Will it, I understand that, it may sort of defer your timelines a bit. Earlier you said by July exports will improve. Now maybe it may derail it further. But will it have a really big impact? And, what can we expect in terms of an annual run rate for exports now in FY24, both for the industry as well as for Bajaj Auto?
It's hard to say. As I said, it's very uncertain. One day we hear of three-wheelers being banned in Egypt. The next day it's motorcycles being banned in Iraq. The next day Argentina can deal only with RMB. The next day Nigeria devalues by 30%. I mean, who can predict anything? It would be very speculative. But I can definitely say this at this moment, that I don't think what we said for July needs to be deferred. As I explained, we are already coming back to about 140,000. Hopefully next quarter looks like 150,000 if there are no new nasty surprises. So, we are coming back to about 75% of the normal. And, in the bigger picture, I mean, price increases do get absorbed and consumers do adapt, because at the end of the day, what we are selling them is not luxury. We are selling them something they need, which is a basic necessity of life, to go to school, to go to work, to go to shop, to socialize, so on and so forth, or even as a motorcycle taxi in Africa. So, and the OPEX is still very favorable, So price increases have happened before, for various reasons in various markets. Markets have come back, so I'm not unduly concerned about that. We are focused on our products, on our distribution, on our sales and service activation. So we feel confident.
Okay, just one quick question before we let you go, because, this is the hot topic at the moment, this discontinuation of the FAME subsidies, right, from March of 2024. Right. I know your view on this, but do you think that the timing of the subsidy withdrawal may not be right? And in that context, it may end up derailing this whole, EV transition that we are expecting?
My own personal view, frankly, is that the correct time to do this is earlier the better. You know my view. I have said that over 30 years, so many innovations came into the ICE engine, which was a simple two-stroke air-cooled engine meeting no emission norms, to where we are today. And I can list up 30 technological innovations that came in over 30 years without any subsidy. And therefore, I feel, I don't understand why governments all over the world think that subsidies are going to drive sales, because in the end they are not sustainable. The money needs to go into that which can create the right environment for EVs. So be it charging infrastructure, be it special lanes, addressing battery disposal issues, etc. Hopefully we are moving in that direction.
So, Rajiv, this is not altering your plans with respect to the Chetak, and the rest of the EV trajectory at all, is the sense that I get?
Oh, absolutely not, because, I was very fortunate to be part of Bajaj when we transitioned from scooters to motorcycles. For me, 30 years later, this is a sense of deja vu, motorcycles to EVs. As much as our goal 30 years ago was to be the world's most versatile and complete motorcycle maker, which I think we have achieved. We have become the world's most valuable motorcycle maker last year. I hope we can repeat the same thing with EVs. I hope lightning strikes twice. And if I may lean on Elon Musk, we will do all we can humanly possible to make that happen.
Well,
very timely leaning on Elon Musk. We just saw that picture of Elon Musk with Prime Minister Modi, right, doing the rounds on Twitter. But Rajiv, always great speaking with you, and happy Yoga Day once again to you. Thank you for not just the yoga lessons, but life lessons as well.
Thank you, everyone. Happy Yoga Day again.
Right. Let's slip into a quick break on that note. We've gone on for a goodish bit. When we come back from the break, we'll be in conversation with the management of BSE. The stock has been a big winner in the first quarter this year. S. Ramamurthy, who's the MD and CEO of BSE, will be with us to discuss their business momentum. We'll also be joined by Prem Kishan Gupta of Gateway Distriparks to discuss their business outlook. Stay tuned.